Hello, this is Megan Horniman, the Chief Investment Officer for Verdence Capital Advisors, bringing you Markets with Megan. Today we're going to talk a little bit about what we're seeing going on in the commodity markets, specifically in the oil market. We've had consistent upward pressure on oil prices for many reasons, primarily the war between Russia and Ukraine. But last week, Saudi Arabia decided to extend their production cuts by 1 million barrels a day for another month. So it's putting upward pressure on oil prices. We're in the peak driving season in the U.S., so you're seeing oil prices up more than 20% just over the past couple months. This is translating into higher gasoline prices, and you're going to be feeling it at the pump. But there's one other factor that we wanted to highlight on why we're seeing gasoline prices rise, and that has to do with the excessive heat that we've had this summer. The refineries here in the U.S. can't operate at full capacity when we have temperatures over 100 degrees. So refineries are now operating at a lower capacity. That means less gasoline making its way to the pumps, and that means consumers paying more. We've seen gasoline prices up about 63 cents just this year to date. To put that in perspective, what that means from an economic standpoint, it's a general rule of thumb that for every 1 cent increase in gasoline prices at the pump, that means there's about $1 billion less annual spending power by consumers. So what we're looking at is about $63 billion of less spending power consumers have this year just because of the rise we've seen here over the summer. So again, we're watching other developments in the commodity markets, what that will mean for consumer spending, as well as what that might mean for inflation numbers over the coming months. If you have any questions or feedback, please feel free to reach out to podcast@verdence.com. Thank you.